Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything that is going on in this market. That is the crypto market, the NFT market, and we attempt to discuss how to make some money, but also just trying to not lose it all at the moment, trying to save whatever it is that we have, whether that's money, tokens, or digital JPEGs. Just trying to save it all. Appreciate it's tough out there, but the headlines continue. We will discuss them and commiserate and just generally get into it in just a bit. Loaded up for discussion today. We've got crypto crash continuing with Sunday's gains completely erased. Got a lot to talk about there. We touched a lot on it yesterday. The fact that the gains were completely erased is definitely something to talk about. We've had the Bybit hacker successfully laundering $1.4 billion of ETH processed by Thorchain. 80% of it is still traceable. We'll touch in with what's going on there. And the Nasdaq submits filing for Grayscale Hedera ETF. So the ETF stuff is still moving, whilst the market is very much moving against us. We'll discuss all of that in a little bit today. We've also got the latest on price action on crypto and NFTs as usual, plus a general discussion on what we think is going on in the market. I've got Legendary and Rahim today in the co-host seats. We are ready to get into it. But just a reminder, friends, nothing that we do, say, or think on this show is financial advice. The market is so risky at the moment. In particular, therefore, please exercise your own judgment and use your own caution and do your own research. With that out of the way, Rahim, it's Tuesday. It's the 4th of March. How are you doing? How are you feeling? How's this week been for you?
GM, everybody. Good to be back. Always good to hang out with you guys. It's been a slow week. Obviously, roller coaster of a ride happening in the market. But I've been focusing a lot on learning traditional markets and how they function. I feel like that's something that we are seeing more and more. I've literally set up this goal for this month for me to educate myself a lot more on traditional markets. So that's something I've been focusing on. I also had a very nice conversation last night with two other people who are in crypto. And I personally believe that a lot of people should do this. So anyone in the audience, feel free, find people in your industry that you can have intimate discussions about what's happening in the market. Of course, on the timeline, it's hard for people to be honest. It's hard for people to be vulnerable. Sit together, find that, find your clan of people, talk about if you're feeling a bit scared, a bit anxious, if you're feeling a bit down, if you're feeling a bit hopeful. I generally think a lot of times people don't want solutions to their problems. They just want to know that they're not alone in the boat. And that's all you need. We are in a market where all you have to do is survive. So find your group of people that you can trust and just have an honest conversation. Don't worry about being judged. At the end of the day, look out for yourself, look out for your well-being. So yeah, that's something I've been focusing a lot on, and super grateful to have amazing people around me.
Sounds like bear market talk, Rahim. Sounds like this is the healing process, part of the healing process, part of the philosophical process of dealing with the situation as it is, coming to terms with what it is. I find I agree with every single thing that you said, though. Having the group of people who you can chat with about all of this stuff is super helpful. Any key takeaways that you kind of left with from those conversations that you were having?
Yeah, as cliche as this sounds, one of the things we were just talking about is whenever you see a massive run up, just start taking profits. I've been heavily stabled up for a while, and I've been playing even with the pump we had on Sunday. There was a part of me that wanted to FOMO into it, but I didn't. I was I've reached to a point, and I'm very grateful to have been there, that I would rather miss out an initial pump but see a sustained balanced market and then get into it with less risk than try to gamble more and stuff. So I think we were just talking about, at the end of the day, move money to your bank account. If you live through a fiat thing, which a lot of people do, even yeah, you have your stables, but I think with stables you're still you FOMO into it, you deploy into it, set aside some money, put it into your bank account, and just do that more often. So that's something that we all spoke about, that we all been practicing a lot, and we want to do it way more than we've already been doing.
Yeah, I think that makes a lot of sense. And as you say, it's kind of cliche, but That's kind of what we've been preaching on the show as well, whether it's to the bank account or just to stable up. I think I've kind of mentioned it a couple of times already. If you've been listening to the show routinely over the last 3 to 4 to 5 months, we've kind of been speaking about the mania. We kind of spoken from maybe January or so onwards as points in time to start taking some stuff off the table, because it's just unfathomable levels of greed slash crime taking place. And that's never usually a good sign for the market. So I think there's a lot of wisdom in that. I've got some things to share as well. Legendary, wanted to check in with you first, and then maybe I'll give some quick reflections before we get into the headlines and all the usual discussion.
Yeah, GM, very beautifully worded by you on the reflections and on being able to share with other people. I'm kind of in a similar mood. I'm doing weird things. You would consider them weird, knowing me. You would not consider them weird, but me doing them, you would consider weird.
Okay.
Which is, I'm looking into buying a CryptoPunk. I'm meeting with an art consultant this afternoon who's been consulting for some of the most prominent European collections, and just to chit chat with him about more traditional art and educate myself on that a bit more. So this is currently my focus, and I do think that this is definitely a reflection of the market. I very much agree on the sentiment on stables. I feel like but we'll get into this a bit later in the show either way, but it's extremely hard to trade sustainably in this environment. Don't want to get into this now because we do have a piece of news that is tying into that, but I very much share the sentiment that has been expressed so far.
This is why you've really got to, there's so many signs. There's just so many signs all the time. It's like at the start of last week where we even said, going to the gym, doing other things. Even that is a sign. The media, this is why media, I saw Mando tweet about this as well. I quote tweeted him where he said there was this interesting moment where for the first time ever, very, very recently, his newsletter lost one subscriber. And it's you can just feel these things from the media side. And if you just observe how people who track the news all the time behave, you can get real clues into how the market is going, because it feels the last few days like things have just, it's like echoes. There are echoes around. So I think there's interesting insight there. Very, very interesting insight. The thing that I was tweeting about was this thing, Rahim, you mentioned how people are might be tempted at this point in time to try to gamble, either to make something back or to recreate the environment of meme coins. So when the meme coin stuff was happening, people thought, okay, well, this is risk on. We can make a lot quite quickly. It's easy money, right? I mean, in reality, it wasn't easy money, but the point is there were charts that were moving very, very fast, and the illusion of easy money was there. And I guess in a market that's not doing that, the way that you can recreate that feeling is with perps. And because Hyperliquid just happens to be the most popular protocol at the moment, because that's the thing that's got so much attention, because that's the thing that everyone's got onboarded to, it's just right there. And I just think that is, to the extent that people might have lost stuff already, that's just the glaring red. I don't know if it's a red flag, because it's a skill to learn. If you want to become a better trader, sure, that is one of the things you're going to need to master. But if you're going in with the behavioral muscle memory of meme coins, which is see a coin, ape it, deal with it in 6 hours. If it's gone to zero, don't worry. If then you just repeat, see something and press the buttons. I just think you get absolutely destroyed on the perp side. And you can lose a lot very, very quickly, arguably even faster than meme coins. So that's something I've been considering, something I've been keeping my eye out on. Before we get into the main stuff, Oxy, your hand is raised. Welcome to the stage, my friend. What are your thoughts, reflections? Bit of a somber mood at the moment. So curious to hear your take on how things are going.
Yeah, absolutely. Thanks for having me. Yeah, I'm not gonna make things better, I don't think, unfortunately. But just want to echo what Ryan was saying. Finding people, something that I've been doing.
Oxy, just a quick one. Your audio is coming through really, really badly for me. I don't know if you're.
Is it okay?
Maybe you want to. I don't know in what way you're coming through. Yeah.
Yeah. Is this any better?
Mm,
Oh, maybe not.
try it.
Okay.
Try it.
Hey, Can you hear me better now or no?
Yeah, that was a bit better.
So yeah, I don't know, just kind of echoing what Ryan was saying, just finding like-minded people to speak with. So something I've been doing is trying to find people that I can meet with in person, like near me. So I've been on LinkedIn. It sounds like the most bearish thing in the world, but I've been on LinkedIn finding people that I like had connected with in my past life and like getting lunch with them if they're interested in the crypto and blockchain area, and just kind of talking to them in person, getting outside the house a little bit. So yeah, I mean, I found that to be a great place to talk with like-minded people who are interested in the space and get out of the house a little bit, get away from the
Yeah,
clicking.
sounds good, man. By the way, the audio is not super improved, so definitely need to get you set up with a better audio thing. I did take away one of the things you said though, and to be honest, I find that quite funny because one of the tweets I was going to put out, or towards the end, one of the tweets I was going to put out is like, to the extent that it's bearish, I think LinkedIn is going to be one of the next places all of us need to get more active, because it is going to be the next leg for crypto. It's going to be far more institutional. And the thing that I've been saying is loads of normal people can't hack it here. Like when I went to corporate things, I went to a big law firm event in London, one of the big American law firms. They had like a digital asset event. They never call it crypto, by the way. They always call it digital assets because I think they can't even handle the word crypto. But when I was there and talking about the profile, the show, and anything else that I'm doing, one of the other things that they can't handle is they just can't handle Twitter. Like normal people are actually scared of Twitter. They think it is toxic. They cannot handle the concept of it. And I would say that's almost 9 people out of 10 in a corporate environment who are like very well educated, who will probably be part of the professional industries that are maybe potentially moving the industry forward. They really, really dislike Twitter. And I think that's one of the reckonings that we might be facing as well, which is crypto Twitter as it was once. I don't know. I don't know if it's going to exist as prominently as it as it was before. That's a big statement, I think, but I think that's something to really keep in mind as this institutional stuff moves forward. Want to get into the main stuff in just a second. If anyone's got a comment on that, boys, let me know. But I want to go to Phunky first. Your hand is raised. Welcome to the stage, my friend. What your reflections here? Any thoughts out the gate?
GM gang, I'm just here to inject some bullishness because this bearishness that you guys are wallowing in is just a little too tough for me, right? I mean, Raheem, I wish I lived in Dubai. I would have those intimate conversations with you every day. I think people just need to focus on the long-term picture, where this is all going, up and to the right, everything else. And to your point about LinkedIn, B, we use that strategically for our podcast, for Decentral Lounge. So we put out clips on X for the DGens. But knowing that we're an institutional focused and facing brand, we also put up our clips on LinkedIn, and they do amazingly well because you have people who are crypto curious, even though they don't like the word. Maybe they'll say digital assets. But at the end of the day, I love that you're going back to the gym. You should do it bull or bear. It doesn't matter. But I think, don't let the price action affect your mindset. Don't let CT sentiment of all things, which is a tiny, tiny, tiny echo chamber, affect your sentiment. Focus on the big picture. Look at stablecoin regulation. Look at the things that are happening in the United States. Forget Trump's tweets. Just look at the big sort of macro structure environment that we are currently building and think about what this is going to look like in 2030 or 2035. Everything is bullish right now. So no more bearishness, boys.
I like it. I like it, Phunky. The only thing is we need the gym thing to be an indicator. We like the indicators. So I'll let you know when I stop going to the gym after I start. That'll be the key thing revealed on the Modern Market exclusive as well. All of our health programs will be fully disclosed from now on, including Legendary. What did you start doing in the previous bear, Legendary? You were doing like juices. You were doing all kinds of weird juices in your fridge.
I'm actually back to the juices. I just ordered them again. I'm gonna do another 1 week juice cleanse. Yeah.
We're gonna need full grocery orders disclosure for the show. That'll be the disclosures that we do. Very, very important market data, clearly.
You see how Legendary's minted for Solana posts have gone down, which is like food posts that he would put out every once in a while.
Yeah, you got to track that as well. Got to track that. Look, let's get into it, boys. We've got a lot of stuff to get into today. Important discussions to have, starting with the majors as usual. Price action on Bitcoin is down 10%. Bitcoin is at 83. ETH is down 11 to just under 2,100. XRP is down 11 to 230. BNB is down 6 to 568. Solana is down 16% to 135. All of the gains from yesterday basically given up. So that's on the majors. On the meme coin side of things, and I've got an interesting point to make on this as well, if this even stays part of the show. Doge is down 12% to 19. Pepe is down 17%. Trump is down 18%. Bonk's down 18. Flocky down 15. WIF down 23%. Pengu down 20%. SPX, Murad's coin down 25. This is brutal, guys. AI16Z down 30 in 24 hours. Bartcoin down 38%. This is absolutely brutal. I had not looked at this before the show. Peanut, flat. Holding strong. The peanut, the squirrel. A nice memory of this bull market just gone. MOG is down 25% in the last 24 hours too. Pretty brutal, guys. Absolutely brutal. AIXBT, even on the AI side, down 26%. So that is that. Definitely got to reflect on that in a moment. But getting into the headlines themselves, we've got obviously the big general crash that has happened. A lot of the gains have been completely erased from the previous 24 hours after the initial announcement of the crypto reserve. We had the Bybit hacker successfully laundering $1.4 billion of ETH processed by Thorchain. Almost 80% of that is still traceable. 20% of it they have gone dark, i.e. they can't really trace it anymore. And then finally, NASDAQ submits filing for Grayscale Hedera ETF. Phunky is talking about some reasons to be bullish. The ETFs seem to be on a conveyor belt at the moment, and they're rolling that out for more and more assets. So we'll discuss that as well in just a little bit. Legendary, is there anything notable going on the NFT side? What are you thinking there?
Notable, yes. Bullish, no. The green that we had experienced yesterday is also mostly wiped. Pudgy Penguin's down 7%. Milady's down 4%. Azuki's down 6%. All of the gains that we've seen yesterday basically have corrected, with the exception of Bored Apes, who are only down 1% and sitting at a 13.75 ETH floor. Another major mover, although again in the red direction, are the Kaito Genesis NFTs. They are down 28% over the last 7 days, 13.5% over the last 24 hours, sitting at a 2.26 ETH floor, and basically mirroring the price action that we've also seen for the Kaito token. So definitely that negative sentiment has carried over for JPEGs as well, and there's not a lot of bullishness to report today from that side.
Fair enough. Good assessment on the NFT side. Getting into the Web3 Roundup to get you up to speed with everything else that's happened in space in the past 24 hours. Michael Saylor in an interview said that Bitcoin will go to 20 trillion, then to 200 trillion in the latest CNBC interview. He also noted one thing I found interesting, which might not have been reported. He's been meeting with a lot of people, like a lot of government people. He mentioned all kinds of positions of people who he's been meeting with. I think there's probably something to note. Next, Hyperliquid Foundation announces the mainnet validator will become fully permissionless after the next network upgrade. Hyperliquid continue to ship, although their price action is pretty aggressively down as well. I want to check all those alt L1s or chains in a second when we get into a bit of a discussion, because they were up a lot. Let's see where they sit at the moment. Yuga Labs announced that SEC investigations closed its investigation into Yuga Labs. So again, this is just the trend now. All of these investigations into crypto companies being closed. I think Kraken was also closed yesterday. So, these people can operate without the fear of enforcement in some way. Popular bearer chain meme Henlo surged to $100 million yesterday before pullback to 25. Bearer chain's looking quite healthy to me, to be honest. Definite community that exists on Twitter, at least, and the TVL is huge still on bearer chain, so something to keep an eye out for. In more creator news, it will launch the Zora token on Base this spring. Wouldn't be surprised if you've either been collecting or creating on Zora. You might have some kind of allocation there. The first snapshot was taken yesterday, and there will be another snapshot taken 3 days before it goes live in the spring. So potentially trying to get you to do more activity on Zora, I suspect. Kanye West account tweets a photo of, this was pretty ridiculous. Kanye West account tweets a photo of Ansem to ask for help on a meme coin. I just checked that photo's since been deleted. And finally, interesting on the NFT lending side, Rafiq Anadol 101 Machine Hallucinations received a $400,000 loan on Gondi. Pretty significant. It was a 120-day loan at 18% APR with a $2,600 origination fee. So NFT lending, NFTs being used as collateral, still a strong use case for them, especially for the most valuable ones. That is the Web3 Roundup to get you up to speed with everything. Rahim, before we get into the main stuff, anything catching your attention here or otherwise? What are you noticing? What are you interested in?
I think the Yuga Labs SEC news was like pretty interesting because we've obviously seen SEC like shut down their cases against exchanges, whether it was like Gemini, Kraken, Coinbase, you had MetaMask. Yuga Labs was actually the first project where they went after like straight up NFTs. This was back in 2022, if I'm not mistaken. It was somewhere around autumn of that. So they went behind the NFT assets and the ape coin as well. So the ape coin was also okay, like you could argue that on like certain levels, but the NFT things was obviously a big move back then. So to kind of see that SEC being like, okay, like you know what, we're kind of backing down. You know, you do NFTs as you are. I think it's a pretty bullish sentiment for the NFT space, regardless of how it's doing on market wise, to kind of get like that stamp that okay, like now you have like companies and projects that can start probably innovating and being like, okay, how can they bring more value to their consumers, all the way from like an incentive model to more like a business, like you know, having, I don't know, like some sort of like more of like what can we do from a business side for these holders, for these NFT collectors. So I think that's definitely something super optimistic to see on the broader NFT side, because we've never had like a proper indication of like, you know, we had like David Sachs talk about how meme coins are collectibles, but we never had something on NFTs. I think that's kind of good to see that in the market.
Do you know what? I have a it's not an alternative take. Maybe it's just taking that to a different conclusion. I agree with you that it's good that people don't need to worry about that stuff. But the thing that I'm thinking about that is, what's the net effect that's different? Like, does that make the assets any more valuable? Does that make the companies any more valuable? I think, you know, a reasonable proportion out of 10 were just doing it anyway. So like Yuga Labs was an example of a team and group who just went with the ApeCoin thing. They went with the DAO. They just did it all despite all of the potential legal hurdles, and they dealt with them as they came. And then after that, like Azuki have done it. Doodles are in the process. Loads and loads of NFTs have basically, you know, Pudgy Penguins have done it, of course. So loads and loads of NFT projects have gone with a fungible token. But that's before. That was before all of this approval and saying, oh, don't worry about it, guys. You don't need to worry. So my question is, or my thinking is, this doesn't actually make a difference to anyone in terms of how you make your company more valuable and make a difference to your experience with your holders. It's just greenlighting what some people have basically already decided that they were going to take the risk on anyway. And if anything, it puts actually more pressure on companies and protocols, because now you're allowed to do it. So now you maybe need to do it in a way that is successful. Like, go ahead, do the token then. If every NFT project is allowed to do it now, there'll be pressure, go and do it. And now make it valuable. Whereas before they could always say, guys, we're not going to do it for these reasons. And I would actually agree with them that most projects probably still shouldn't. You should not do it if you don't think that you can make the token valuable, because that's a very, very difficult thing to do. But arguably, I don't know, I just think it's a delta neutral thing. It's business as usual. And, you know, they just still need to make their assets valuable. It doesn't really make a difference. I don't know if you got a further reflection on that, Ryan.
Yeah, what I would say to that is it's exactly like if you take the examples that you gave, which is Azuki, Doodles, and Pudgy Penguins. Again, these are companies that had like big backing. They had good capital to actually fight off this, like from a legal point of view, right? If you think about two projects that come to my mind, which is Rectiguys and the Plague, they did this whole thing where they gave like equity in the company to holders and stuff. I think that's of course not that I'm saying that projects have a lot of products over here to for that equity to mean for majority of the projects here, but I do think like it takes me back to Garga's tweet for like a couple of weeks ago when he was like, with US regulation becoming like way more favorable to crypto, there are two ways to look at it. One is like crime season on, you can do whatever the hell you want, you can launch tokens or whatever. The other way is to build out that, okay, what are other sustainable products that we can build out? Are there like revenue streams that we can give out to like collectors? Are there business models that we can incorporate with our holder base? And he was like, I would like to bet on the second side of it to see what other innovation comes out of this space. Maybe this is the gaming, we talk so much about like Web3 gaming. Maybe this ends up being the missing piece of the puzzle of that. Okay, are there business models that we can create around where we incentivize gaming NFTs?
Maybe. I think that the fee switch thing, the staking thing, rewards, maybe even having an expectation of being able to partake in profits, that will be the key unlock. Like, can people do that? Can Uniswap put the fee switch on? Can Ape find some kind of fee switch that they can participate in the profits of Yuga? Like, that's where I'm thinking the actual tangible difference can be made. But if it's just about dropping a token, I feel like people have been doing that anyway. That's my reflection there. Legendary, anything catching your attention?
Yeah, just one additional point from Ovarch in the YouTube comments, who's been saying that another big thing that's also changing is that it's now easier for apes to get airdrops. That apparently this also has been a reason why they didn't get airdrops such as I mentioned, because there was this ongoing SEC investigation, and this has now changed, which I think is also a good point. In terms of other news, however, the Hyperliquid one is the most interesting one to me out of the pieces of news in the Web3 Roundup, mainly because we've been having this security discussion on the one hand around Hyperliquid, on the other hand around the Arbitrum bridge, and how there's been also this bigger discussion with Taj a couple weeks or a month or so ago. So that has been definitely interesting, or is interesting for me to follow, because I posted it this morning, I've been thinking about pulling my stables at least from Hyperliquid, because I always kind of accepted basically that additional risk of their validator setup in exchange for having a way above average yield on my stables, aka having a 20% yield on that. But now my thinking, and this is where I kind of asked the question, am I mid-curving it, was that TVL on Hyperliquid, relatively speaking, is still low. The HLP has like 500 M's in it. And if you have people trading 9-figure leveraged long or short positions, potentially having more access to information as to when something gets announced or not, that is directly eating into my yield as someone who has money in the HLP. And now HLP yield is down to like 13-ish%. And then my thinking is, if the yield is down from 20 to 13, that continues to be the game, do I actually want to take this additional risk in terms of their security setup, which now is being upgraded, is changing, but that's something where I definitely lack the knowledge to understand how impactful this change or this upgrade is going to be. So for the meantime, my answer to that was take my stables off Hyperliquid, try to understand this piece of news a bit more, reassess if I'm happy with what I gather from reading and researching that, and if I'm happy with that, putting the stables back in, and if not, just trying to put them to work somewhere else.
Interesting. That is an interesting point. I hadn't thought about that. If that was the place where insiders basically trade the most, it kind of effectively cuts into your slice. Interesting point. I'd actually taken my stuff out of the vault a while ago, not for any specific security concerns, but it's obviously like they're still building stuff out, right? And so I would put it, when you're thinking about security concerns, it's like on a as a spectrum, it's more of a risk to me than maybe some other places, basically. Okay, I just wanted to share with people these alt L1s that have been exploding, and just go through and maybe share how they are doing, because we didn't talk about it in the price action section. We've got Chain is down 20% on the day, but it's at $6.20, which is a $3 billion FTV. You've got Story, which really exploded up. That's down 16% also on the day, but that's at a 5 billion FTV. which is pretty significant still. I mean, all of these are still pretty significant. And then you've got Hyperliquid down also 16% on the day. And that is a 16 billion FTV. So a lot of these coins in line with the market are taking a big hit. But this was part of my tweet earlier, Legendary, would be curious what either of you think. One of my big mistakes was holding ETH significantly this cycle and kind of talking as if the cycle's over, not because maybe the full cycle's over, but whatever point we're in now, it's clearly we're at a juncture where whatever mania we've just gone through is not going to continue in that specific way. And ETH was a significant underperformer in that way. And the mistake that I made, which I wanted to share with people, is essentially thinking that past performance was a predictor of future stuff. I think ETH is ultimately tech. It's fantastic tech. They've got so many people who've worked on it for so long, and it's done it. I'm still really, really optimistic about all of the DeFi, for example, on ETH and lots of the stuff that it does. But it has clearly, objectively done very, very badly versus all of these other things. And the thing that I'm way more open to now, which I was very resistant to being open to before, I guess, was that all of these people are coming for ETH's lunch. Like Hyperliquid is coming, Berachain is coming. To use these chains, you need their gas token, which is Bearer or IP or Hype. So I'm just way more open and alive to the fact that this is like a dynamic competition now, rather than ETH being the king for smart contract chains. I'm just way more open to the idea that no, this is like a dynamic competition. Got to keep an eye on community, on leadership, on activity, on revenue, and just way more open to that, way more flexible on that, I think. So that's my reflection there. Do either of you have any reflections before we keep it moving?
Yeah, I think that's a very fair point on the more dynamic competition. I feel like there's been a lot of a discussion on that on the timeline with people like DFarmer, DeFi Ignis, kind of sharing this sentiment because they've been holding ETH for such a long while. They just got used to holding it. Yeah. I think DFarmer specifically made that post on one of the dips that he bought. He initially wanted to buy on Hyperliquid 50% BTC, 50% Sol, ended up doing 33% BTC, 33% Sol, 33% ETH, despite knowing there's no reason for him to buy ETH. That is like what the mental illness, how he called him, that is kind of holding him hostage. And I feel like a lot of people, including myself, are in this situation because we've been with ETH for such a long while. But to me, it's like still kind of the central hub where I get the majority of my work done. Doesn't matter, I'm agnostic to all the L2s that I use, but it's where I keep the majority of my stables. It's where I farm majority of my stable yield. It's where I deploy most of the DeFi farms. It's from where I take capital to another place that I want to explore. So that is DJ Tsoi in the comments saying I have mental ETHness. I love it.
That's good.
That is kind of this central hub for me, and like also where I do most of my transactions. And it feels weird to basically do that at the same time, but then also say, per se, I just think the competition's getting really good and I'm not too bullish on ETH while still using it. And I feel like this dilemma or this like dichotomy is like hard to overcome. So this is where I think that many people who are in the same position, including myself, then have a higher ETH exposure than they maybe want to have because they use it so much and they then also want the token to follow that price action. But then again, if you even look back on the last 12 months, ETH is down 38% over the last year, basically underperforming every other asset, stock, gold, whatever else you've been holding. So that's kind of my conundrum with it.
Yeah, and the key thing, maybe an extension of thinking, we've been around, maybe this is my second cycle, I know you've been around for longer, but like my key thinking or the way that I'd extend it for people who are newer is this is guarantee going to happen for people to Sol. Like there'll be certain people who came in this year, or people who have made their money with Sol, just like the way in the first cycle I kind of made my money with ETH. And then you just have this allegiance to it. You have this blind allegiance to it because you think that that was such a good thing, because that's your literal first experience as well. When it's your first experience in crypto, like your psychology literally just feels like it's this super trusted asset. It's so useful. It's really good for all these things. And Sol is going to have that as well. So Sol is not immune to this. Like Sol is great. It's really good for all types of things too, but it's tech, and there's going to be, you know, in the same way that people are gunning for ETH, people will gun for Sol now as well. And I think that's also part of this dynamic competition that exists now. And the incumbents are vulnerable, basically. All this to say, I think that kind of strengthens the Bitcoin thesis ultimately, because you kind of really starting to realize everything else is in a savage competition with each other. And as Saylor says, there's no second best to Bitcoin in that respect, at least. Look, interesting conversation. Glad we kind of dwelt on that. We've gone way over as that part of the discussion. Want to get into the main headlines in just a moment. But before we do that, we've got our Polkadot explorations segment, Legendary. Why don't you take that away?
Absolutely, let's do it. And take a look at Bifrost. They have just announced they've gone cross-chain to expand the Bifrost LST tokens across the EVM spectrum. So now providing you access to earn yield on your staked DOT on base via liquidity pools. Just taking a step back, Bifrost is a liquid staking app chain that's tailored for all blockchains to earn staking rewards and farm DeFi yields as well. And while Bifrost is native to Polkadot and Kusama, the staked V tokens can now be bridged via Hyperbridge to Optimism, Arbitrum, Base, BNB. So you can basically put those liquid stake tokens to work and to use on DeFi platforms and DEXs like Uniswap or Athena. And the core product of Bifrost is V staking, which I'm currently sharing on screen. You can stake tokens like DOT, Manta, ETH, BNC by depositing them into the protocol and mint a so-called V token, which basically is a yield-bearing token that, in the case of DOT, if you stake DOT, you receive a V DOT token. If you stake ETH, you receive V ETH. And those are the tokens that you then can put to work in DeFi applications. Since it is a liquid staking protocol, you can use them as collateral to borrow against them. And we showed how to actually do this in a dedicated segment a couple of weeks ago on how to use VDOT to farm additional yield by creating a borrow loop between, on the one hand, Bifrost, on the other hand, Hydration, just the main DeFi protocol on Polkadot. And the current TVL is around $65 million on Bifrost, which is spread across almost 90,000 holders who've cumulatively earned $3.9 million in staking rewards, which you can participate in by visiting bifrost.io.
Love it. Super helpful stuff. That looping strategy you spoke about, I know, was super popular. I think it was basically sold out. The demand was through the roof on that. So lots of interesting opportunities taking place on Polkadot, which we are always exploring as part of our partnership with them. Let's keep it moving then. Main headline for today. Rahim, you're going to take it away. We've obviously been philosophizing about the consequences of this, but the core information that people need to know, maybe some core takes, is that the crypto crash has continued, and all of the gains that we had just 24, 48 hours ago have been completely erased. So what do we need to know here? What are people saying? What's your key take at the moment?
Fantastic. Just to like recap everyone, we obviously covered this like yesterday on the show. We had like a pump on the weekend on Sunday when Trump announced on Truth Social the crypto strategic reserve, which had Cardano, XRP, Solana, and then he came out later saying, I love my Bitcoin and Ethereum too. So we obviously saw like a massive pump on that side of things. You obviously saw very polarizing takes on the timeline. A lot of people, actually prominent people, came out saying that it should actually only be Bitcoin. Just because like all of this, there were like certain takes. I saw the two prime CEOs saying that Cardano and Ripple are essentially tech products which just essentially have a product, have a crypto coin. We shouldn't be becoming like a hedge fund. US shouldn't be handling like money as like it's a fund. So there were like a lot of polarizing takes on the timeline. One in particular that I found very interesting was there was someone who said that if tomorrow China and Russia ends up buying XRP as well, which is a complete like US company based, and it's a pretty centralized ecosystem, are there ways where US can put sanctions on this to the point XRP gets frozen for like US and China? And I thought that was like a very interesting take to bring about, because we keep forgetting the element of like decentralization in all of this. Fast track today, obviously like the charts are significantly down. We've retraced and have gone a lot lower, and that comes with the fact that the tariffs for Mexico and Canada come into place today. Trump also essentially placed a 10% tariff on China, which they retaliated by putting a 15% on US. So Trump ended up turning that 10% back to 20% for China, essentially doubling it, something that he's been holding over people's head a lot, that if you don't comply with us, we're gonna like take it further. So in general, like the US equity market is just like not doing well, which is why you have majors dumping a lot, and uh, obviously altcoins and memes have been dumping significantly, as mentioned earlier in the show. I think the last thing to kind of keep an eye out is on the 7th of March, I believe the crypto summit is happening at the White House. Apparently there are a bunch of like CEOs and prominent people in the industry that will be there at the event. Of course, like there's speculation around in the industry that there's going to be something out of it. We don't know. If anything, we've seen like a lot of these announcements end up being like nothing burger, and we end up like over speculating. So keep that in mind. The rumor that we saw floating around on Twitter, and again, take this with a pinch of salt, was that they're going to announce zero capital gains tax, something that a lot of people have been speculating, although it just like seems contrary from Trump's stance. Like, he's been imposing tariffs on like all these countries to bring back, to strengthen US's economy. So to think that like, he's going to remove tax is kind of a wild theory, but also like, Donald Trump is Donald Trump. He come up with his own ideas. He'll come up with his own theses. So that's something to keep out on for the 7th of March.
That is an outstanding summary, Rahim. Thanks so much for that to get us up to speed. Obviously, kind of covering 48 to 72 hours worth of price action and a lot of interesting takes coming off the back of it. I completely agree with you. Like, I'm reading through the block article on the takes that have been kind of emerging after people heard that, in particular, XRP and Cardano would be included. And I think, to be honest, the reaction has been pretty scathing, right? I think we can probably go so far as to say that I haven't seen anyone necessarily come out and say, wow, it is so good that Cardano and XRP are included. I don't necessarily even think, I don't know if these two things should be in the same bucket. I feel like people may be more negative about Cardano, and there maybe is a bit more of an XRP army that think it's really good. So I would say that. But, one of the takes being something like things like XRP, Cardano, and Sol are all basically tech companies that happen to have a crypto currency. They're very, very centrally controlled, and ownership is highly concentrated. These products, I'm just reading from the article here on the block. This was a take from Director of Business Development at Space ID, which is nothing to do with space. I don't think it's to do with this stuff. He said that these products are constantly changing and adapting to the market, whereas Bitcoin is a decentralized product with no single group of owners or controllers and is more akin to gold. That's basically what a lot of people have been saying. It's what Coinbase CEO Brian Armstrong said, as well as a bunch of other people. So seems like pretty negative on that. What are we thinking here then for the summit on Friday? How are we thinking about that? What is the expectation, Rahim, from your perspective? I know you mentioned capital gains tax potentially, but we definitely don't know anything about that for sure. Is there anything that you are looking for from there? Like, what if you don't know what's going to be there, what would you like to see?
So I'm going to take like a slightly contrarian take to something that you tweeted out, B-Check, which was essentially that if they announce the crypto strategic reserve or like actual actionable next steps, that it's going to take some time for that to actually play out, and that's where you believe like the market's going to like chop for a bit and stuff. And I was thinking about it, and although like how government institutions and regulations work, you do know that this is like a multi-step process, so it takes time. The thing I was wondering about, that if you believe, we saw certain takes on the timeline where China is apparently having closed door meetings about setting up their own strategic reserve on the crypto side. So the thing I've been thinking, that if whatever announcement that they have on 7th, which is very much on the pro crypto stance, even more than they've done today, wouldn't US want to front run every other country? And if they took very long to basically for those steps to become actionable, for like US to actually buy a lot of these cryptos, wouldn't they end up like losing that race to like certain other countries? And it's just like something I've been like thinking about, because um you have the entire economy not doing well. He went straight up with the tariffs on like all these like neighboring countries, which is just like, let's do this now. It's not like a long-term plan. We need to bring back like US's economy. We need to bring that money back. This is what I'm just like thinking, that maybe there is a world where like they end up announcing. So here's what I think. I don't think the capital gains tax makes sense in my head. Obviously it would be great for the industry, but it just doesn't work in my head. What I feel is that they're gonna set up dates, and these dates are gonna be way sooner than later, about the next steps for them, essentially converting like the Bitcoin that they have to the Federal Reserve, and for all these other coins that they've mentioned to actually go and outright buy them in the next few weeks and stuff. Obviously a very tinfoil hat take and stuff, but that's the stance I'm taking.
Fair enough. Interesting thoughts. I think one of the impossibilities, and I'm not saying there couldn't be other ways around this, is that I believe that at least in the States, in order to actually action spending, like if it is their intention to spend money to purchase the assets, that is like a definitively long process, because you've got to go through all the right processes to do that. However, if there's alternative ways to get hold of it, maybe that could be different. I think that is what I'm super curious about for Friday, which is when someone said that people should not be taxed, i.e. my tax dollars should not be going to purchase Bitcoin. David Sachs replied and said, but he didn't say they will not be. He said, just wait and see. He was basically saying it's not going to be that. So your tax dollars will not be going to it. So very, very curious to see how that accumulation, or just holding what they have, is kind of specifically explained. And just the final thing, I want to go to Phunky and hear Legendary's take on this. Is clearly the thing which is preoccupying our minds the most at the moment. I think for me, it's not that the strategic reserve is not important, or that the announcements are not important on a longer time frame. So I think if you're looking at this from a longer time frame, I think it's good. Frankly, I was reflecting on this. Even if you take the strategic reserve out, I'm still bullish Bitcoin, because I think if governments are left to do whatever they're doing with money, like Bitcoin goes up. So it's obviously overtaken the narrative, but I'm not super concerned in the very long time frame. The thing for me is just that there are other things at play, which, you were even speaking to, Rahim, like educating yourself on some of the other stuff at the moment. And, maybe it's not even the economy as such, but just like, for me, it's the tariffs, it's the departure from the EU as consistent allies. Like, I think that's just a huge thing for the world that seems to be taking place, where they've become very, very antagonistic with their traditional allies. And I don't know what consequences, I haven't thought through what those consequences are for the rest of the world. That's obviously created all this war uncertainty. And then internally, so that's the external stuff. Internally, you've got all this Doge cost-cutting stuff, which is incredibly aggressive. And then the only caveat to that is someone shared with me a tweet the other day. It might have been Confusion. I don't know if he's listening today. Just sharing that the spending, another spending bill just went through, and it was as large as ever. The debt ceiling was increased just as usual. So it's very important, I think, for me to get on top of, this is what they're saying. Okay, they're going to try to cut spending in these particular ways, but you also just got to watch the money. Like, are you actually doing it? Because if in the end nothing changes and that debt ceiling just keeps growing and the debt keeps going up, it's kind of business as usual for all risk assets. So, multiple factors going on. Appreciate your thoughts on it. Want to go to Phunky, who's got his hand raised, then Legendary, want to come to you for your thoughts, and Raheem, if you want to come back as well in a moment. Phunky, come
Just
back in
one
here.
second before we go to Phunky, because we have a YouTube comment by Overarch, which actually has a question for Phunky.
Oh.
And Overarch is saying, think Beanie had a good take. Trump is a master negotiator, so he's proposing multiple tickers just to settle for BTC only reserve in order to be able to pass that through the House. And what's your take on that, Phunky? And obviously also curious to hear your general reflections on the conversation we've been having so far.
Yeah, no, I mean, honestly, I would love that. As I've said for many times on the show so far, I'd much rather see legislative action put a strategic Bitcoin reserve into place, because an executive order does nothing when a new president comes along and says, no, we don't need this anymore. So, I mean, having it cemented through, the House and the Senate, that would be, to me, the most bullish thing ever. So, I mean, I would rather see that. And now whether or not that is a political ploy on behalf of Trump to kind of, position people and let his insiders make money. I saw a tweet this morning showing like exactly when the person that had the gig along opened, and they closed it. They almost nailed the top. So it's kind of crazy how they must have had some inside information from the market maker too, knowing exactly where it was going to ping. But anyhow, putting that aside, I don't, just to kind of come back to something that Raheem was saying, I don't think the zero cap gains, and I'm not saying that this is what they're going to announce, but I don't think this is a mutually exclusive. When you think about the fact that the tariffs are hurting people on the outside, I mean, they're going to hurt Americans a little bit too, right? Because your costs are going to rise. But in the grand scheme of things, they've openly talked about abolishing the IRS, Doge and all this other stuff. So to have zero cap gains on crypto would be just an absolute boon for the entire industry, especially when you think about the bigger players. It's going to entice people to move back to the United States. This has already started just because Trump has sort of been this very pro crypto president, where they're trying to bring back these businesses that have offshored to Dubai or to the Caymans or to wherever that it's just, jurisdictionally prudent for them to be doing business at this point. So that would be one thing. Think about the people who poured money into his campaign. They have way bigger bags than my few Bitcoins that I've collected over the years, right? Like these are people who, when they sell, to have zero cap gains is going to be, in the billions at times. So, I mean, I think that this is something, again, I'm not saying it's going to happen on the 7th, but I think that this is something that they're genuinely going to work toward, because it would be such a push for onshoring business here in the United States, and just getting a lot of fervor around the industry and getting people to be in a more bullish stance overall.
Interesting. Really like the takes, man. And thanks for bringing up that additional point on. I can't remember what you even said. I was just nodding my head. I know that I was nodding my head aggressively at some point. I can't even remember what it was. Legendary, just give us your take, and I'm going to try and remember what it was.
Love it. Yeah. No, I think the main thing from today's and yesterday's discussion for me is how Trump is like thinking about the crypto industry. And I think yesterday we had this part where he said he's not taking it as seriously as we are, obviously, because it's just not his main focus. It's another tool in the box that he is using to create the policies that he wants to create. But ultimately also as a like pragmatic result of that, we are getting very much additional attention on our industry. We are getting attention from family offices. We had David from Silvermine speaking about family offices being super interested to become LPs in his liquid venture fund as well. So overall, while not all of the things that are happening are very enjoyable, and especially not in how they have been communicated so far, and just now that we're like speculating about what potential policies can be announced on the meeting on Friday, or potential additional news that will come to light, it feels just a bit weird to kind of do that. But I do like to focus on the net positive outcome that hopefully will come from this exposure that we get to crypto and Web3, and very much agree with Phunky's up and to the red sentiment on that. But I do think that there's going to be so much volatility, not only like in the crypto, but also in the traditional stock markets. And we start to see a fraction of that in the first month of his new presidency, or of his second term. And I just think it's going to be important to know, and that's a very individual question, when you want to trade that and when you don't want to trade that and how you want to position yourself for that. I think B, you made the point that a lot of the meme participants are now moving to perps, are moving to leverage to get exposed to volatility. And because Trump in his communication can be coming out very, very strong and very surprisingly, you will see markets move very strongly in the matter of a couple of minutes, which can be enough to liquidate you if you have a leveraged enough position open, which can, on the flip side of it, create interesting entries if you want to DCA in or buy spot for the longer term. So I do think that keeping this volatility in mind that will be with us for the next years probably is something that I want to have for my own portfolio and trading, a strategic answer to how I want to deal with that going forward. Because personally, I said it on the show, I did trade on Hyperliquid. I had the leverage longs open, closed them pretty quickly, made some profit, but that was, again, extremely stressful. That's probably not something I want to operate again over the next couple of years. So it's maybe more of a like meta reflection of everything that we've been saying so far, but I'm trying to find the answer to my personal trading strategy from all these discussions and volatility implications that we've been touching on this show.
I like it. I think that's really, really helpful to have that conversation out loud. I'm definitely in agreement on that kind of long time frame view, but I just think in that short to medium term, we're definitely at a juncture where closing the door on the meme coin casino vibe and just opening the door to this next phase. And I think there'll be a lot of people heading for the exit door as they are unable to adapt into whatever environment we're moving into, maybe something that's slightly more dominated by this institutional news flow, whilst the kind of retail side is looking for its on-chain risk, and it's not really getting it, at least for a period, even as all of this other news is incredibly, incredibly good on the face of it for the industry. So I think we're in this juncture period. It's going to take some adaptability to do business here. It's going to take some adaptability to trade here. And that's what we're going to continue to explore and converse about on this show as we move forward, because we're not going to go anywhere. This is way too fun. It's way too fun to enjoy the conversation with all you guys. Hope you enjoyed it as usual. That is our show for today. We didn't get to the other headlines again today because it's clearly the biggest thing going on at the moment. So wanted to focus on that with you. Hope that was interesting. Thank you so much for joining us. Thank you to the guys in the YouTube comments going off as usual. Thank you to Legendary and Rahim for co-hosting as always, and Phunky up top and Oxy for contributing as well. Have a wonderful day, guys. Take care. We will be back tomorrow to talk the same thing, hopefully to a green day. Have a wonderful day. We'll see you tomorrow. Bye-bye.